Hey traders, welcome. This is our weekly trading preview for a brand new week of trading starting here today, Monday, June the 6th, 2022. All right, folks, let's go ahead and get into it. We had just another great week last week. Let's hope that we can have even half the success that we had last week this week. It would be another great week. So taking a look at our overview from our technical analysis standpoint, again, in this weekly preview, we use a weekly time frame, and it gives us a little bit of a different picture, a little bit different overlay than what our daily picture looks like every single day inside of our trading room, our live trading room. But it's a good overlay to sort of look at maybe the 30,000 foot, maybe the bigger picture in all of this. And while we are sort of sitting on a neutral to even slightly bullish intraday or daily technical analyses, we're still in a sell mode in terms of our weekly approach. Now we were able to, on the weekly period here, to break into the buy zone on the 5-day simple moving average, but it's still not quite enough to move us into that overall buy zone. So keep that in mind. We've had some nice bounces here this last week in specific. It's just been awesome, but it doesn't necessarily mean that we have shifted from a bear market move overall to a bull market. I think that the next couple of days here will be very, very telling. We look at some key support resistance areas here. You can see that we're really pinching down here. We are really starting to pinch down here. And what that means to me is, and I've talked about this so often over times, we don't really care whether the market's bullish or bearish because we can trade it both ways. In fact, I almost prefer bearish because the moves tend to be bigger, and that creates better volatility and better opportunity for us as primarily option sellers. But regardless of that, beyond that, I look at the market basically as just a trending or a consolidating market. It's either expanding or it's contracting. And we have been doing pretty much nothing but going down for 7 weeks. That was a big talked about number. This idea that maybe we get 8 weeks in a row of a down market and how rare that is, but it was not to be. Last week was a 6% move to the upside in terms of a green week. So when you talk about green, that was definitely green. But in terms of consolidating and expanding marketplaces, we've had the last 4 or 5 days of trading that have just basically had a little bit of movement. But it's basically been side by side for the last 4 or 5 days of trading, consolidating into this sort of pinch zone, if you will. I do believe that this week, at least if nothing else, we're due for a breakout. It doesn't mean it's going to happen, but I think that we're due. I think that's where we're moving to, is a breakout week. Now, again, it could be up or down. For us as traders, that's not really that important, other than the fact that we recognize that. For me, when we are looking at the marketplaces, again, my numbers for this week haven't substantively changed from last week. 4,100 on the E-minis, of course, is a big demarcation point. That's something that we want to continue to look at. 40.85 below that would be the next level of support for me, and then below that, 40.35. So again, the market really needs to stay above 4,100. That is sort of a big demarcation point for me for the bulls. Again, if you are looking at resistance levels, 41.30, 41.85, and then 4,200. Those would be areas of demarcation for me going forward here for this week, key support resistance levels. A couple other things to look at: monthly sector rotation. There's been a couple of areas here in the April-May period versus the March-April period. Again, this is, we talk about 30,000 foot views. This might be a 60,000 foot view. It's a little bit pulled back, broader view of what is happening in the overall market once again. And once again, I come back to healthcare. Healthcare and, of course, the consumer staples. We've got an AST program that we're trading some of the consumer staples areas in for value. But I would look at healthcare and consumer staples for me, really, in terms of the value quotient or value area of the marketplace. Healthcare, of course, has been getting beat up for quite a while here. And it continues to be one of the areas that I keep an eye on in terms of valuations. Again, last week was a really, really solid week. We've strung a couple of weeks here together of really solid weeks. And again, it'll be interesting to see this week. I do think that we're in store for a breakout week in terms of what we have coming before us. We did have a solid week last week. But at the end of the week, it was pretty much just a big nothing burger. Pretty flat on the week, although we did have some ups and downs. It pretty much balanced out after that just massive explosion to the upside that we had the previous week. So again, we'll see what that brings for us this week. But I do believe that we are in for maybe some potential numbers much like 2 weeks ago. I don't know if they're going to be up or down, but I think that that's the type of move that we could be due for this week. We'll see how that rolls out. We look at the put-call ratio. That gives us a little bit of idea of what the market sentiment is. Are most of the trades coming into the market bullish or bearish? A put-call ratio above 1 is when the put volume exceeds the call volume, and below 1 when the call volume exceeds the put volume. It's just a way, again, to gauge market sentiment. And we do view the market as being excessively bearish when the ratio is above 1 and excessively bullish when the ratio is below 1. So we look at the numbers here, and I think what's telling for me, this is 2 weeks ago, and then this is last week's numbers. Not too much of a difference. Total put-call ratio went from 0.9 to 1, which again, it's pretty much balanced there. But what I'm looking at more than anything, volume last week, not great. Volume 2 weeks ago, not great. Volume last week, even worse. Very, very light volume. And I've talked about this a bunch for the last couple of weeks. It really is taking away our opportunity to double dip on the zero DTE strategy. We have sort of become accustomed to being able to grab 2 and even in some cases 3 zero DTE trades in a day, and we're lucky to get 1 in now. If we don't get it in the first couple of hours of the day, and that premium is dissipating really quick. We look at our open interest gamma spots, and again, this 4,000 level is just a huge demarcation point of this writing right now. The S&P closed Friday at 4108, and you can see this sort of 44,000 level again, big demarcation point. Again, a lot of volume in the put side versus the call side, but it is getting a little bit more balanced on the week basis. SPS expected move. This is, I think, what's hurting us as well. We got low volume. We've also got low expected moves. Well, low, I mean, relatively speaking. We were up well above 140, 150, 160, 170, 80 point moves on the week. And obviously, when you cut that down, when you cut down your expected moves, you cut down the implied volatility in the credit in the trades that we have the opportunity to focus on. And it just, it's not good for us as credit traders, that's for sure. S&P volume heat map. You can see most of the indicators that I use here. Yeah, we've had a nice little rebound here over the last week, but we're again getting up to these levels that I think we're going to start being a little bit of an overhang for us, a little bit of resistance for us once again. And you do see that most of my indicators, none of them are giving me a sell signal right now, but they are flattening out. They are leveling out. And so, again, I think we're going to see a definitive move here from more of these neutral stances to something, again, either decidedly bearish or decidedly bullish this week. I do think we're due for a breakout week. We looked at the fear and greed sentiment reading to kind of give us an idea of where we're at in the marketplace. I won't belabor this once again, but there's a lot of factors that go into that. And the idea, again, behind the fear greed sentiment reading index is just that it's a contrarian indicator. When everybody in the world is really, really greedy, markets are probably too rich, and it's a time to head for the exit. When people are freaking out and jumping out of the proverbial buildings, that's probably a good time to jump in and buy. You look at the fear and greed index, and for whatever reason, it just didn't pull the actual data from the last historical moves. But we are up just a little bit. We've been sitting in this extreme fear area for quite a while. You can see it. I added this graphic in here as well. But again, one of the things that a lot of people have talked about is to maybe why this correction isn't over and why we do have some more downside is that we never really did get really massive capitulation here on the fear side. Again, remember, it's a contrarian indicator, and we just kind of are just, hanging out here around this level, although obviously it is more tilted to the fear side than the greed side for sure. But again, it's sort of reflected in the VIX as well. The VIX is the volatility index, or what is sometimes referred to as the fear index. And again, we just really don't see any of that fear showing up in the VIX right now. No capitulation. A couple things that I've got on my watch list. I just put for today, which is the 6th, some of the things that are on my watch list. These are all earnings that are coming out today. One's coming out after the close today, but most of them are pre-market here, and they've got some pretty good implied volatility in them. So these are some things that I've got on my watch list for maybe some carryover trades or carry-through trades in our trading rooms bonus session tomorrow. But you can keep these on your list as well. Should be interesting to watch. There's going to be some movement taking place in the marketplace. Trading ideas for this week. Well, today we don't really have any pre-planned news items coming out that should move the market, but my goodness, we got a lot of activity going on. Obviously, we're going to focus on a 0 DTE. It's Monday, so we're starting up again another IWM weekly credit strangle. We're going to start up our 4 DTE SPY and Q trades. We've got our yen trade that we need to recover and re-cash flow. The last cover that we had on that expired fully profitable. We've got our nat gas position that I think I'm going to roll up the put leg one more time, try to collect a little bit more income there. And then I've got my short ES trade that I initiated all the way back on Thursday. And I've been cash flowing that to the tune of about $1,200 a day. Well, need to figure out what I want to do with that today. We got to figure out if we want to hold it, re-cash flow it, or just book our profits and get out of it. So a lot of stuff to look at today. We do obviously want to take a look at a 1 DTE overnight index trade. I think that's pretty much a given now for our trading plans going forward. Sometimes we get them, sometimes we don't. Sometimes we're so involved in our 0 DTE trade right up to the close that we just don't even have time to look at one. But we always want to have it on our list of potential trading ideas for the day. Tuesday, we do have trade numbers coming out an hour before the real-time hours of the marketplace opening up. We'll take a look at those, see if they make any difference in the marketplace or not. Sometimes they do, sometimes they don't. Just depends on what the numbers are. But obviously, on Tuesday, we do have another 0 DTE. This is our sort of different approach or strategy to 0 DTEs. Tuesdays and Thursdays are where we're going to start with something that is very, very low capital commitment, maybe a butterfly or broken wing butterfly, something like that, and then overlay it if we need to. Should be a low maintenance 0 DTE trade. We've got a dragonfly. Haven't done a dragonfly in a while, but we got one of those coming up on Tuesday. We're going to look at our pairs trades also on Tuesday and continue to ratio those. Got 3 of those things working. We'd like to move some of those into a profit zone and book the profits and move on to some new ones. And then, of course, we'll be in the scalping room all Tuesday as well. We'll be looking at a bonus trade overnight once again, one DTE trade on one of the indices. And I think that if some of the numbers that I was looking at this weekend hold, we might be looking at some overnight Russell one DTE trades. We'll see. We'll see how that develops as the week progresses. Wednesday, we do have oil inventory numbers out. We're still in an oil trade. So it would be nice if we could be out of our current oil trade before the Wednesday inventory numbers come out. I don't know if that's going to be possible or not. But again, that will largely determine whether or not we put on a new trade or whether we do something with our current trade. Obviously, our focus on Wednesday back to the 0 DTE index trade. That'll be our main trade. And then again, we'll look for a 1 DTE overnight index trade. Usually look for those, right around maybe 20 to 30 minutes or so into the power hour. So just right up there at the end of the trading day. Thursday, trading ideas. We got jobless claims numbers coming out before the market opens up. We got all of our commodity softs. We got the wheat and the soybean and the corn coming out. We, of course, do have a soybean trade going on right now. And this is the week for that. I do not have all of my put legs in on that trade yet. I do need to get them in. This is probably the last week. We're getting down into, I think, about maybe 19, 20 days before expiration on that trade. And now's the time before we start losing some of this premium. So maybe Thursday we'll be looking at working on our soybean trade. We'll have to take a look at it. Nat gas numbers out an hour after the cash open as well. Obviously, we've got a nat gas trade going on, but that shouldn't affect our nat gas trade too much. 0 DTE, obviously our focus for Thursday. We're going to be starting again with the butterfly approach. Got another dragonfly that we're going to be looking at doing on Thursday. And so we'll have two of those up and running as well as our diagonal that we've got working as well. And then, of course, we'll be scalping all day long in the live Zoom feed. Again, looking at some potential swing trades. That worked out pretty darn well for me last week. I might look at doing that again this week. Look at, obviously, again, a 1 DTE overnight index trade on Thursday. And then Friday, we do have CPI numbers coming out an hour before the cash open, and that usually does affect the marketplace. We'll be taking a hard look at the futures market before the market opens up to kind of give us a directional bias. And then we're going to just try to wind up the week with a 0 DTE. We want to try to keep Fridays a little bit light in the trading because usually we're pretty fried by the end of the week. And a 0 DTE, if it works for us, should be a nice cap to the end of the week. So that's kind of what we're looking at for the week. Updated performance numbers. We're now 67 days into the year of 0 DTE opportunities. We've done 109 of those trades, and 106 of the 109 have been winners. So again, just kind of remember, folks, that when you are in the Discord chat room and you're in the trade-only chat channel, if you go to the very top and you hit the pin, it will pull down a list for you there of all of our live trading Zoom sessions. And you can watch any day that you want, and you can fast forward, skip around, see what we were teaching, what we were talking about, what the education for that day was, and of course, what our trading results were and how we managed that day if you didn't happen to be involved in that day. Great trading resource for you to come back in and review what we did on any particular day. Okay, all of our trades, of course, are documented. 4 DTE trades, we did have both of those end up being winners for us last week, so that helps our numbers a little bit. 80 wins and 7 losses. Interestingly enough, the 4 DTEs have been pretty darn solid for us lately, as the 0 DTEs have become a little bit more tough. Our IWM weekly credit strangle trade, just absolutely beautiful. I just don't know what to say. It's hard to get better than that. But 21 total trades, 21 opportunities, We did double dip on 1 week where I think it was an FOMC Fed day on Wednesday. We took it off and then we reapplied it for the remainder of the week. So we've done 22 total trades, and all 22 have been winners. Very nice. Pairs trades, we're still working those same 3 open trades, but we've had some really good success with our pairs trades as well. It's nice with the pairs trades because we can start off with a very small amount of money, very easy to scale. Very nice from a risk perspective because they are not dependent on the market going up or down. It doesn't really matter what the market does with a pairs trade. Bear market trades, we do have one open right now that we put on the previous week, and that one is still working. But we've had 68 total bear market trades. This is over about 3.5 years now since inception. 64 have been winners, 3 have been losers. Still that one trade open. I do break out our Tuesday, Thursday 0 DTE days differently than just our normal Monday, Wednesday, and Friday because we do approach them differently. We usually start with a butterfly and then do an overlay on top of that if the butterfly doesn't work. So far, we've had 9 trades this year. All 9 of them so far have been winners. Last week, average return was 3%. Not our best result, but we did have one of those trades on, I believe it was Thursday's trade, that didn't end up working for us. Well, it was working for us right up to the close, and then it eventually broke through our short leg. We ended up electing to roll that and ended up as a nicely profitable. It wasn't a huge profit, but it was nicely profitable on Friday. So again, not the greatest return that we've ever had, but I'm pretty darn happy that it was a positive return just in general. Scalping results for me last week, we did obviously with the shortened week, we had some scalping going on different days. And I did elect, as I said before, to do more of a swing trade approach in the scalping room for my account. Last week it worked pretty well for me, especially on Thursday, considering I could not have been more wrong. I was short an ES contract, which I still have, still short that ES contract, but I was able to cover it and book a profit on the cover. And then Friday I was able to do that once again, bring in some income, and need to make a decision today on what I do with that short position. Do I still want to carry a short position? Do I want to book my profit and get out? Right now we're looking at the futures markets. Futures are up 45 points. So we'll have to decide on that here this morning. But it was a good week for me scalping wise. AST program, gotta apologize, guys. My wife got COVID over the weekend. She's fine. I mean, well, she's sick and she's in bed, but it just kind of threw off my schedule. I was meaning to get all of the numbers for performance on AST that we obviously do track and publish every single day inside of our AST Discord room. Wanted to get those transcribed over to a video for you on the public side here in the YouTube channel. I just didn't get it done. So still on the top of my list here to get done. Going to start working on that here this afternoon after the markets are closed. But man, we're just a solid week for us last week. We continue to just sort of trounce the market here. And I guess maybe even more important than that is that we're doing it with a whole lot less volatility, a whole lot less risk. So very happy with our AST results. Dragonflies and double diagonals, we do have one of those still open. We're going to try to get 2 more of those, get 2 dragonflies up and running for us this week, one on Tuesday, one on Thursday, so that those numbers will get beefed up a little bit more. Trading bonus gifts for you. One of the things that, one of the individuals that I follow and sort of view as a mentor for me is Tim Ferriss. Just a guy that puts a whole heck of a lot of research into whatever topic he's talking about. And one of the things that he's put out is something called 17 Questions That Changed My Life. There's a lot of ways that you can take and apply this information, but I think there's a lot of aspects of it that, if you're reflective on it, can really help you be a better trader. And so if you will check out the bonus training channel inside of Discord, you'll see that I've put up a copy of that for you. Please check it out when you get some time. Good reading, good things to be mindful and thoughtful of, and I think it'll help you be a better trader. Lots of ways that I would like to connect with you. Twitter is always great at Theta Seller. Please bookmark and click the notifications bell on the YouTube channel. Very, very easy way to see a lot of the strategies and ideas that we employ in our live trading room. And then we've got obviously the AST program and our live trading room and our scalping room that you can get free access to and check them out and see if you like them before you ever commit to anything. So love to hear from you guys. It's always nice. And I do also want to always thank you guys for your support. It's been an awesome journey, and I see the YouTube channel grow. I see the program grow, and it just means a lot to me, your guys' support. So appreciate you, and let's have another good week here. It is getting a little more challenging with the zero DTEs, with the lower implied volatility, but heck, let's keep the ball rolling. I'll see you guys in the trading room literally in 2 hours from now. Take care. Have a great trading week, guys.